Good afternoon, everyone, and thank you for joining us for today's webinar, The Benefits of Agencies Reporting Daily to the Credit Bureau. I'm Jody Hurd, Regional Director of Ridiculously Nice Sales here at AmeriCollect, and I get to be your administrator for today's webinar. If you have any questions for us throughout the webinar, please type them into the question box or email us directly, and we'll get back to you immediately after the webinar. Now, to introduce the main attractions, Kenlyn Gretz and Lisa Vijay Kumar. Kenlyn is the CEO, mastermind, and guiding force behind the Ridiculously Nice approach that defines AmeriCollect today. On top of that, Kenlyn has just celebrated 30 years with our organization, something that we're very proud of. Lisa, who has been with AmeriCollect for over 7 years, oversees our HIPAA, FDCPA, and FCRA compliance procedures at AmeriCollect, just to name a few. Lisa also possesses an array of accreditations, including Certified Credit and Collections Compliance Officer, Certified Healthcare Collection Management, and Professional Collection Specialist, all through ACA International. I will now hand the presentation over to Kenlyn and Lisa to walk us through the benefits of agencies reporting daily to the credit bureaus.
Well, thank you, Jody. We appreciate it, and we're excited to give this webinar here. This is probably one of the first times I've given probably 50 webinars over the years, and this is the first time I've ever had to share the stage, and so I'm happy to share the stage with Lisa. Lisa, she brings a lot of knowledge to us in the compliance, helping us be ridiculously nice to consumers, collecting money for our hospital providers and providers. And so, welcome, Lisa. Excited to have you join the team.
Thank you. Excited to be here.
Thank you. Yeah, with that, we better throw this AmeriCollect legal disclaimer out there so you won't get all upset that we weren't compliant, right?
Exactly.
All right, sounds good. Hey, so AmeriCollect, you know what? Ridiculously Nice for 50 years. Get this. We're going to be celebrating 55 years in business next year in 2019. And along with that, you're right. So I've been here for 30 years. It was my anniversary back on October 21st. I can't believe where this organization has come. When I started here in 1988, we had 5 employees. And so we're excited to take the organization to the next level over the next 55 years. Should be exciting. Another thing we're celebrating here at AmeriCollect, Collection Advisor magazine listed AmeriCollect as one of the top 10 innovative collection agencies. So we're excited to be acknowledged for that. The one thing they picked out that we thought that we were doing very innovatively was this. It's about not calling wrong numbers. And so we set up a really cool process that stores the value of who owns the phone, and then we check that value every 90 days to see if the ownership changed. So we've reduced the amount of robocalls to wrong numbers. Okay, I don't like to call them robocalls, but that's what the industry calls them. We've reduced it, so we're calling more right people at the right time, and we're doing it ridiculously nice. So let's get started with the presentation. Lisa and I are going to kind of go back and forth asking each other questions, and the reality is the questions aren't really a surprise. We've talked about, but we're going to do the back and forth thing. So Lisa, I'll let you kick us off.
Absolutely. Kenlyn, since you have been here for 30 years, I thought maybe you could start with a little bit of the credit file reporting history that we used to start with at AmeriCollect here.
Yeah, so credit reporting, I mean, it's definitely changed over the years. It's become more important as credit has become important. When I started here back in 1988, we used to only report to TransUnion. We'd send a Metro 2 file. It's an electronic file. We'd send that off once a month, and we'd update consumers' credit files with payments and closed accounts once a month. And then I would say somewhere in maybe the early 2000s, we really went sophisticated. We started reporting on the 5th or the 10th and the 25th of the month. So instead of reporting once a month, and at that time we also added Experian and Equifax to the history. So that's a little bit. We report balances $50 and higher. So that's a little bit of the history of credit reporting. We still report to all 3 major credit bureaus and $50 and higher. And but what about the daily reporting, Lisa? Tell me about how that happened and what those kinds of things.
Sure. So back in October of 2017, we piloted a program with purely just Experian. Like you said, we do report to all three of the major consumer reporting agencies, Experian, Equifax, and TransUnion. But we started with Experian, made sure that the hiccups and the data files were reporting accurately for being reporting every day. We wanted to make sure they were processing them in order. We just wanted to make sure the system was really working out for us. About February of 2018, we brought the other two on board and have been daily credit reporting every day. That being said, Kendra, maybe you could tell us why we decided to daily credit report.
Because it's ridiculously nice, Lisa. It's the right thing to do. No, honestly, it is. You know, one of the main reasons why we did is we wanted to have a more accurate credit file more quickly. And so we saw consumers that were using apps like Credit Karma, Credit Wise, all of these different apps. And even like when I get my electronic statement for my credit card bill, it shows my credit card score as a courtesy on there. And so these consumers that are conscious about their credit files, they want to see the achievements that they're doing by making that $100 payment on the account. Now, you know, we're not here to be a professional to say that every $100 will increase your score by 2 points or something like that. That's for the credit reporting and consumer reporting agencies to sort of figure out, and those that build these scores. But we knew that those popular apps, that there was people wanted to know, when's this gonna hit my credit file? What is this? And so we heard that, and wow, the 10th and the 25th of the month sound reasonable to me. Why can't we process these things on a daily basis? And so that was really the real reason why we started this. Another benefit, though, a side benefit, is that we've seen a decrease in the amount of disputes that we're getting from consumers through the credit bureau process. So let's imagine that a consumer sees something on their credit file. They have a process that they can dispute it. So we believe that that's the right thing to do too. We want to decrease the time wasted that they have. So patients like it, that they're getting more accurate more quickly. And our clients, we don't know this for sure, but anecdotally, our clients are probably receiving a lot less phone calls about the collection agency didn't update my credit file, kind of a thing. And so it's really, honestly, in my mind, it's just it's doing the right thing. So so far so good, you know. How about that though, Lisa? So, you know, when an account is placed on a consumer's credit file, you know, how do we help our collectors, Lisa, work with patients? Give me an idea on that.
Sure. So during our onboarding process with a new client, we often ask them, a part of this implementation, how long would you like your account to be listed at AmeriCollect before we do, say, credit file report to a consumer's credit file? Often it is between 60 and 240 days. Primarily, most clients pick 90 days. Well, during that 90 days, our collectors, of course, make phone attempts. We send out notices. If we do have a conversation with a consumer, there are sometimes instances where they just can't pay today. So maybe they are waiting for payday and it pushes it out past that 90 days. Or maybe it's the beginning of the year and they're waiting for their tax returns because they just filed their taxes and they're just waiting for their refund amount. Or maybe they have enough debt that they have maybe done a debt consolidation loan and they're just waiting for the paperwork to go through. So what we do is we allow the collector to have a conversation with the consumer, and if they set up like even a reasonable payment plan that it gets done in 3 or 4 payments, there's no reason to go ahead and list this to a consumer's credit file. You know, that's not being very ridiculously nice. It's not building this great rapport. We do need our collectors to have that capabilities of extending those things. We also allow them to extend it if we get insurance information. Sometimes it's not provided at the time of service. Maybe they didn't have their card. Maybe it was an emergency and they forgot their purse back at home and that had their, insurance card on it. So we want our collectors to be able to get that information and to work with the consumer. So of course we allow them to extend the credit file listing.
It's the right thing to do. Our goal has never been to ding a consumer's credit file. Our goal is to help recover the money for our hospital and medical clients that honestly they need to have the recovery of the file or of the money, and it's the right way to treat consumers. So excellent.
Kevin, did we discover any downsides to credit file reporting daily?
Yeah, we learned a lesson here, and we learned it. Thank goodness we learned it during the pilot part of it. So we are 100% healthcare collection agency. That's all we do, and so we used to report on the 10th and 25th of the month. And so I'll give you the scenario that we didn't have the foresight to think of, and it's a scenario that as a collection agency it doesn't happen that often, but as a medical provider it probably happens to you quite often, and it's when an insurance company recoups a payment. So let's imagine there's a $1,000 bill. The insurance company paid you $600. There was an adjustment of $100, and that the self-pay balance is $300. The patient ignores the statements and the final notice, and the medical provider lists that $300 balance at our office. Now, 95% of our clients that we work with, we work with them on data files that report accounts to us to be listed, update balances, things like that. Well, what happens every once in a while is that there'll be a recoupment from the insurance company. And for many of our clients and the systems that they have, the recoupment, the reversal of that $600 payment and that $100 adjustment come over in a data file. And usually if there's an adjustment, maybe they were, whatever the scenario is, instead of it being $100, it should have been $150, and the payment only should have been $50. That normally happens within the same data file. So at the end of the day, the balance is completely accurate to what it should be. So that if we update the credit file, that next day, it reflects the true and accurate balance. Well, we have some clients that whole process of making the accurate balance sometimes lags by 2, 3, 4 days. And it depends how they process them, if they do them in batches. And so what was happening is that there would be a reversal, and it made it look like the consumer owed $1,000 when they really didn't. They maybe only owed $250 instead of $300, or they might have owed $350. So we enjoyed a few complaints from consumers that, hey, what did you do my credit file? And so what we've done to solve that during that lesson learned is that we put a lag on reporting when there's a reversal of a payment that was paid to the client prior to it getting here, or even after. I think it works even after. We wait 7 days. And so we've been monitoring. We picked 7 days really just because 7 sounded like a good number. We're monitoring this and seeing if that should really be 10 days. And so we don't know if it was a reversal and the insurance should have never paid, or is it a reversal and there's a correction coming later on. So we got to be a little bit more cautious about that. So we want to be 100% accurate with their credit file, and we don't want to be 100% wrong. So that was a lesson, and I'm glad that's why you do pilots. That's why you do pilots. So it worked out pretty well in the end, and so yeah, that was definitely an issue.
With lessons learned and hiccups that we've learned along the way, is credit reporting still, valuable?
Boy, you're setting me up for my soapbox here. Thank you for that question, Lisa. Yeah, credit reporting is valuable, and there's a lot of talk in the industry about this. And so, well, I'll start with this. So we use a speech analytics tool called CallMiner. So all of our call recordings are transcribed, okay? So We use it to monitor compliance. We actually have our own customized ridiculously nice score, so we can tell that the ridiculously nice collectors actually collect more money, and so we have the data behind it. And so one of the things that we were studying was how often is the word credit report, credit file, credit listing in a conversation when we have a third party or a right party on the phone, a consumer on the phone. And so our studies show that about 38% of every single conversation we have with a right party, a guarantor that owes money, somebody is bringing it up. Either the consumer is bringing it up or our staff might be bringing it up, but that's 38% at the time. So it's an extremely valuable tool. And so in our industry, when I talk to other agency owners, we're a very large organization. Those disputes, credit file disputes, we have about 3 FTEs managing those disputes. And some of them are done by credit repair organizations where they're hired simply to go on and keep disputing it. A consumer might have 20 disputes in a period of 6 months when it's really a credit repair organization doing it. They're just trying to improve their credit. But it costs money to report to the credit bureau, but in the long run, our data says that it's worthwhile to report to the credit file. And occasionally I'll talk to an owner of an agency and they'll say, well, we did this test and for 6 months we stopped reporting to the credit bureau and our recoveries never changed. And I'm like, well, that's because consumers believe that it's going to affect their credit. Now, the only way to really do a test to see is to, on the phone with the consumer and in every communication, explicitly tell that consumer that this will never affect their credit file. And then I'd like to see what their recovery rates look like, because I don't think so. But just by nature, people know that collection agencies report to the credit bureau, even if you explicitly don't tell them. So yeah, their recoveries might not have dropped, but it's because the consumers still believed it. And here's something else about healthcare. I mean, we only do healthcare collections. You know, the federal government already thinks that healthcare debt is sort of a second-class kind of a debt. But ultimately, it's the accounts receivable that our healthcare providers need to operate. It's not like you're operating on these huge margins. Every dollar of recovery counts for you. And if you make healthcare and you don't report to the credit bureau, they have no incentive to even pay the primary provider. Why would I? It's not going to go on my credit file if it goes to the collection agency. So it's really important to ask your collection agencies. Yeah, we understand it's expensive to do because of the sort of the collateral damage that comes with it, people disputing the credit file. And that's one of the reasons why we went to daily reporting. We want to reduce those people from disputing their credit file because we're going to have it more accurate. But I really think that healthcare providers need to encourage their agencies to report to the credit bureaus and not, like I said, if we didn't have these false disputes, and if we didn't have these false disputes, I think every agency would tell you that there's a lot of value in that. So can I give you an exact number that says that 88% of the dollars that we recover are because it was on a consumer's credit file? That one's hard to get to because sometimes the check just arrives in the mail or there's an inbound phone call and they don't say, I'm trying to improve my credit. But boy, for as much as people bring up the word credit or credit report in a conversation, I'm sure that it does. So Lisa, can you tell us a little bit about the New York Attorney General Agreement? I think it was back in 2015 was the agreement, is that right? Because this is where you talked about the insurance and making sure that we treat consumers with respect when there's insurance issues and be ridiculously nice to them. Tell us a little bit about this New York Attorney General Agreement. And again, it's from 2015, but I still think it warrants a little bit of explanation.
Absolutely. So back in about actually 2012, the New York Attorney General office, the office itself was receiving complaints about consumers who were having a difficult time of correcting errors on their credit file. Now, the CRAs, or the consumer reporting agencies, fully cooperated with the Attorney General and agreed to revamp some of their processes. With this settlement, it was just a revamp of how they process records, or what records they were going to accept, or what requirements were going to be needed to be met for them to accept a trade line. There was absolutely no monetary penalizing the CRAs. So the Attorney General during this process did take a particularly good look at medical debt, being that about a fifth of the population that has a credit file has some form of medical debt on their credit file. That's about 40 million people. So they created some additional requirements for medical debt for that to report to a consumer's credit file. There was a 6-month waiting period added, or 180 days from the first date of delinquency. And there was an additional requirement that if insurance paid the balance in full, we would remove it from the credit file. Now, that 6-month waiting period for reporting to a credit file, it provided, according to the New York Attorney General office, a cushion for the consumer to maybe rectify some insurance disputes. Maybe there was a coding issue, or maybe they didn't hand in their insurance card, or the claim just wasn't processed to the right insurance first. It just gave a little time for those to kind of be ironed out. It gave a little bit more clarity to what the consumer actually owes of the final bill. AmeriCollect, what we have done is we put it in for our clients that we figure out that 180 days. Back in an earlier slide, I told you that we have it that we, on our onboarding process, that we have a conversation about how long you want your accounts to list at AmeriCollect prior to us reporting it to a consumer's credit file. Now, if you pick 90 days, and that is shorter than the 180, we still have a process in place that we make sure we're meeting all the requirements on your accounts, not just the ones we set up in-house. So if it didn't make the 180, we'll go ahead and wait that 180 days for you to make sure that everybody is having all their requirements met. That second requirement about the insurance being paid, what happens is even if it does list in our office and it passes that 90-day requirement that you want, and it passes the 180-day requirement that the Attorney General's office wants, and it does report to the consumer's credit report, but we find out that this consumer does have insurance and the insurance is willing to pay, we'll go ahead and remove that once we receive that payment in from the insurance company. AmeriCollect, once again, has put in kind of a checks and balance kind of thing about saying, where did this payment come from? And if it is coded that it's an insurance payment or, an insurance adjustment, and that there's no remaining balance for that consumer, we go ahead and remove those from the credit file as a part of this requirement. The third requirement that is required with this Attorney General agreement is not specific to medical debt. It's for any credit file listing, is that we need complete demographic information on the consumer. So this came up due to a problem called mixed files. Now, a mixed file occurs when a consumer reporting agency inadvertently commingles the credit histories of two separate people and blends it into one report as if it was one person. Most frequently, this happens with people that share common names, have similar social security numbers, dates of birth, or addresses. Now, due to the complexity of a commingled account or a mixed file, those tend to need human interaction to have a long conversation about, to pick apart the file saying, this is mine, this is not mine. And unfortunately, consumer reporting agencies and the way they dispute things are very automated, and a consumer is just picking a box. He doesn't necessarily get a human. So they decided that we're going to have it we're going to have it that it now requires full demographic information. So that means your full first name, full last name, full street and address, city, state, and zip code. We need a full date of birth, so you can't have just the 1/1 of 1900, and you can't have just the last 4 of a social security number. We need a full date of birth, or we need a full social security number. If one of those demographic elements is not listed, it will not go to the credit report. Now, we do have our collectors on every phone call attempting to get demographic information, to confirm the demographic information. But it is still super important that our clients also, at the time of services being rendered, obtain as much information as possible to help us meet this requirement with the Attorney General's agreement.
Excellent job, Lisa. You know, bullets number 1 and 2, all of these things are sort of automated processes in our systems. In our system, we have controls that we built to manage these. So there's no manual process. I just want to be clear on the demographic information. It's, you know, in order for an account to go to the credit file, first name and last name, a full address, city, state, and zip, and it's an or on this item, either a full date of birth or a full social security number. And we did some, you know, when this went into effect in 2015, we managed this and monitored it. And 95% of the accounts that we get listed have one or the other. And again, this isn't the patient, this is the guarantor. And so some of our clients, we gave them the information and we said, hey, you may want to add these attributes to the placement file so that we can get a more accurate credit file. And then really that's what this is about, is we don't want to have these mixed and matched on someone. And so we make sure our system actually won't even send it to the credit bureaus unless we have that information. And you know, a lot of consumers are concerned about getting their full social security number. When you give your full social security number, that prevents it from accidentally being mixed and matched with somebody else. So if you give no social security number, you actually have a greater chance of possibly getting listed in someone else's file. So we're running a little bit out of time here, Lisa. I'll take this last slide. You know, for those of you that are not-for-profit healthcare, you're hearing about this New York Attorney General agreement where we have a delay before it can go in their credit file and a process of insurance paid. Well, or is about to pay also. 501R for not-for-profits, you're all familiar with this. It has to do with charity care. And so our process in credit reporting is also compliant in that aspect too, to make sure that we're not doing any extraordinary collection activity. And that's really important. We just want to let you know that on our website, in the Knowledge Center, in the center there's a whole bunch of webinars that our Vice President Sean Gretz has recorded. And again, the credit bureau reporting that we do is compliant with 501R also, making sure that we're waiting the process for the financial assistance wait time, or if there is an application under review and they're later approved, that we remove it. So Lisa, I'm going to give you an A+. You did a great job on this webinar. Really appreciate it. If you have any questions, you can email me, kenlin@americollect.com, or lisav@americollect.com. We certainly appreciate all of you joining AmeriCollect on our webinar. And I want to wish you a happy Thanksgiving. I am thankful to all of our clients and visitors that are on this webinar too. Many of you are contemplating using AmeriCollect as a collection agency. We'd love to have you. We're here to change the way collection agencies are viewed, and we do that by being ridiculously nice on every single phone call. Thank you so much for joining us.